Hey everyone, it's Mike from Orderflows and welcome back to my channel. In today's video, what I'm going to be talking about is breakouts, but this is an order flow channel. It's based off of order flow, so it's not going to be your traditional volume breakout or range breakout. It's going to deal with delta breakouts. And a breakout is an important event in trading, in the markets, because it often signifies a potentially significant move in the market. All right, so before I begin, be sure to subscribe to the channel if you haven't already and hit that notification bell. So, every time I post up a new video, you'll get a notification and you can come watch it. And, if you got any questions, be sure to leave them down there in the comment section. All right. So delta, right? In order flow, delta is the net difference between aggressive buying and aggressive selling taking place at a price level, right? And you're going to measure it. You could measure it, at an individual price level. One of the easiest ways to use it is looking at it in a bar by bar basis. Okay, so for those of you just really quick that don't understand what delta is, right? See at the bottom of your chart, there's the numbers. You get positive numbers, negative numbers. Bar is either going to have positive delta or negative delta. And just really quick, what is delta? So in the two-way auction, right? In the markets, right? You have a bid and you have an offer. Okay, when an aggressive seller sells into the bid, that registers as -1 delta. Why? It's because you have an aggressive seller removing liquidity from the market. It's removing one. If you have positive delta of 1, that means an aggressive trader bought one contract at the market. They bought it at the offer from a passive seller. So negative delta means aggressive selling. Positive delta means aggressive buying. Okay, so again, every bar is going to have a delta, and it's either going to be positive or negative. And on rare occasions, it does happen that it just ends up at 0, where it's just evenly matched, aggressive buying and aggressive selling. Now, it's not the amount of buying taking place on the offer or the amount of volume taking place on the bid. It is the difference, right? Because you see in a bar, right, there's volume that trades both on the bid, there's volume trades on the offer. The difference in this case, -80 in this bar, is there was 80 more contracts sold into the bid than bought from the offer. Okay, in the previous bar, it's -167. Okay, so there's 167 more contracts sold into the bid than bought from the offer. You can see over here, there's a 1, right? There's a 3. In this case, in this bar right up here, this green candle, there was only one more contract bought from the offer than was sold into the bid. Again, it's not that there was one contract, a volume of 1. There was 161 traded in this bar, but rather the difference between the aggressive buying and the aggressive selling was just one contract. Okay, there was one more aggressive buying than aggressive selling. All right, so when you're talking about delta, so again, every bar is going to have a delta. It's either going to be positive or negative, or in the rare instances, lands on 0. And again, when it lands on 0, I don't read anything into it. It's just a coincidence. If there was one more trade took place, it could be positive, it could be negative, right? It just, if it's 0, it's 0. Just as if it's 1, it's 1. If it's 3, it's 3. Now, if it is a smaller number, I tend to treat them as neutral, because especially on a time-based chart, this is a gold 30-second chart. If it is within a certain range, positive or negative, I just sort of treat it as neutral. And what do I mean by neutral? Well, it could go either way, again, depending on the type of chart. So if there's just one more split second in the bar formation, another trade could have taken place, and it could have been, instead of 1, it could have been -5. Okay, but when numbers, delta numbers, in my opinion, matter the most is when they are growing, right? When they're strong, either positive or negative. Again, I don't put too much importance in 1 or 3 or 4, but hey, -89 tells me something, -24 tells me something, -167, -80, -112. It's telling me there's strong selling, right? When you have obviously a 1, a 3, a 4, it's kind of neutral. It doesn't really have much impact on the market, because buyers and sellers are pretty evenly matched in that bar. But then when I see a bar, -89, it's telling me obviously there's strong aggressive sellers taking place. -167, -80, -112. Now, delta, right? It's sort of a offshoot of volume, okay? Now, it's not volume itself, it's the difference in volume between the aggressive trading taking place on the bid and the offer. And we know that with volume, right, increases in volume indicate increased participation and interest from traders in the market, right? Higher volume reflects higher liquidity and greater conviction behind price movements. Okay, so let's take it a step further, and I'll put your thinking cap on. When you see volume increase, right, we know that there's increased participation, right? Increased interest. Now, if you see increased delta, either positive or negative, what do you think that means? Well, it means if volume increases, right, that means increased participation and interest. Now, delta, which is an offshoot of volume, again, it's a difference between aggressive buyers and aggressive sellers. When it increases in a certain direction, either positive or negative, it indicates increased participation to that side, either aggressive selling or aggressive buying. So, for example, right before this market sort of puked out, right? You can see the deltas are kind of small. -1, nothing. 5, 6, 7, -11, -11, 1, 3. And then wham, it gets slammed, -89. What's that telling you? Market's just sort of trading, evenly matched here, going sideways, and then aggressive sellers are taking over, right? -89. See here, -24. Okay, it's not the biggest number, -24, but still, it's bigger than obviously -11s and single digits. And then when it gets slammed again, -167. So in this bar, -89, in this bar, -167, aggressive sellers are active. Okay, and another clue would be, are there selling imbalances? Here you got one, but here you got 1, 2, 3, 4, 5, right? Usually when you have strong negative delta, you're going to get a lot of selling imbalances. If you got strong positive delta, you're going to get a lot of buying imbalances. So if you weren't convinced here, right, on this market, it's just sort of, trading normally, and then wham, this was your first clue, -89 in the delta. Then again, sort of quiets down again, 4, -24, then gets slammed again here with -167. You should be aware that, hey, you know what? There's aggressive sellers coming into this market. The next thing you know, market drops basically from 24.05, which is up here, but 24.04 and a half, all the way down to 24 even. So it's a $4.50 move. Like within, this is a 30-second chart, so that's within 1 minute, 2.5 minutes. Okay, and when you're looking at delta, right? Sometimes you're looking at order flow. There's a lot of numbers. You got numbers in the footprint. You got ratios. You got volume, delta, max, min delta, cumulative delta. Delta volume. You got a lot of numbers to look at, and sometimes it gets a bit overwhelming, I admit. Even me as a trader, sometimes there's just so much going on and markets moving. You need tools that will help you see things quickly at a glance. And one of the new tools on the Orderflows Trader 7, right, our newest version of Orderflows, is the Delta Breakouts. Okay, and it's right here. Now default, I believe, is set to 200. But I lowered it because this is a 30-second gold chart. And what you're going to be looking for, it's very simple. Okay, you just enable it, right? You can see up here. Okay, this is a little bit off the screen. I clicked apply. I enabled, clicked apply, click OK. What do I see? I see right here. This is a delta breakout. It's gone from obviously, small delta of 4 to -24, -167. Delta is breaking out strongly. So if I know that I have strong aggressives, in this case, it's a negative delta breakout because delta is increasing to the negative side, and that's why the box is colored red, and I got this little pink zone up here. That I know there's strong aggressive sellers taking place. And as a trader, I could focus on, okay, which way do I think the market's going? I know I got strong aggressive selling. I could cue myself up to get ready to get short, right? Just as if, let's see if there's a bullish one in here somewhere. Here's another bearish one, right? It goes from 16 to 12, -12 to -124. But what's the difference between this bar and this bar? Okay. And I always talk about this, right? Let the market take you in. Just because delta increases over, several bars here doesn't mean it's an automatic short. If the low of this bar is, 2403.90, then the next bar opens up and we're trading 24.05 and a half, doesn't mean you automatically get short. You're trading a breakout or a breakdown. So what you need is this market to start breaking down. So you have your breakout here, but the next bar doesn't go anywhere, right? It goes inside of this, basically, of these two bars, and then goes higher. Whereas here's your breakout, right? Reason we put a box around this is so that I know that at the low of this bar, right, the second bar, the low of this box, that's the area where if we start trading below it, I want to get short. Okay, so that's telling you below 460, basically 460 or 450 and below, that's where you want to be getting short and sell off, and look for the sell off. Right here, it doesn't break that level. So it doesn't break 390. Okay, so it doesn't trade 380 or 370 or below. So you're not getting short. Okay, here's your breakdown, right? It's just sort of going sideways, 8, minus 48, minus 5, minus 1, 46, and then minus 5, minus 113 in delta. So delta is increasing. You got aggressive sellers coming to the party after this sideways activity. The low of this box, since it's a red box, is 980. So where you want to be getting short, 970 or 960, that area. Just wait for the market to start trading there. You just drop, this box is going to draw here. You just drop a stop here, right below the low of this box at 60 or 950. Let the market take you in. And it drops from 950 all the way down to 06. Okay, let's take a look at some other ones. If there's any more this morning. This is gold today. Okay, well, let's go back to yesterday, see if there's any bullish ones. Okay, here's a couple bullish ones. This one. Okay, so it's a big increase, right? You see strong selling coming in, minus 140, minus 77, this minus 5, whatever, minus 82, then 48, 159. Then the market goes sideways here. It does pop up a little bit, but it doesn't go above this blue box here at 490 is the high, so it doesn't hit 05. So you would not be looking to get long, okay? Here's another one, okay? Now here, right, this blue box, so it's bullish, right? I see there's a little blue zone here as well to give me another clue. So I know that if we can trade above 530, which is the high, that I'd want to get long. It trades, 540, 550, pulls back a bit, goes sideways for quite a while, and starts shooting up. And again, this is understanding the markets, right? If you're getting long and it just goes sideways on you for 10 minutes or so, 10 bars or 8 bars or 5 bars, that's a sign that the trade's not working out. I wish every single trade would work out beautifully, but, sometimes it doesn't. Here's a nice bearish one. 2 bars, right? Your red box. Okay, next bar goes inside. It doesn't break down until the second bar, right? And you can decide, how many bars you want to wait. I like to wait 2 bars rather than just immediately 1 bar. I like to give it at least a chance to make its move. And it does here on the second bar. And then, boom, the rug gets pulled and drops, basically from almost 08, that's what, 780. And the next bar down to below 6, 580, and eventually goes down to 2.5. But really, getting out somewhere in here is decent, quick, nice little scalp. So, that is the Delta breakout tool on Orderflows Trader. And again, depending on the market that you're trading, you will want to adjust the Delta threshold. Obviously, if, say you're trading a bond, like bonds or 10 years or 5 years, you're going to want to adjust it to take into account the amount of volume that goes through the market. If the default is set to 200, which is fine for like E-minis, MES, even some of the Euro currencies. If I was on a 1-minute gold chart or 1-minute crude chart, I would start looking at the default setting of 200. But again, you could sort of go through your markets and make the adjustments as necessary. All right, everyone. So thanks for watching this video, and I'll catch you on the next video. Bye-bye.